Bismillah Rahman Rahim, dear viewers, Assalamu alaikum. I'm your host Faisal Raza Khan and you are watching Foresight. Viewers, every Pakistani wants revival of economy. Why? Because every citizen's future rests upon the economic conditions. And the satisfactory thing is that despite of all odds, the economic indicators are showing promising results. According to the State Bank of Pakistan, the country's GDP growth is projected 3.5% during this current financial year 24-25. State Bank recently cut the policy rate by 2.5% or 250 basis points. Pakistan Stock Exchange is showing extraordinary, crossing 92,000 points. Foreign direct investment is picking up, though slow, but it's steady, and it surged at least 48% in the first quarter of the financial year. Remittances reaching $30.3 billion. Trade deficit is shrinking and the exports are growing. Forex reserves slowly but steadily picking the pace, and right now, according to the State Bank of Pakistan, the reserves are at least $11.2 billion and accumulatively it's nearly $16 billion. When we are talking about the current account deficit, it is hovering around 0 to 1% to the GDP. Fiscal and the primary balances are posting surpluses, and this is just because of the record State Bank of Pakistan revenue, especially the non-tax revenue growth and the fiscal discipline. As Pakistan navigates through the critical phase of the economic growth, there are lots of daunting challenges still left. Number one is how to broaden the tax base. The state-owned enterprises, SOEs, reforms and the fiscal risk minimization. The debt retirement, particularly the foreign debt, along with that the domestic debt. The circular debt management as well. In this scenario, International Monetary Fund special delegation is likely to visit early next week to Pakistan to have comprehensive discussions regarding the 37 months IMF extended fund facility, that is $7 billion to Pakistan, and its overall progress and the ground realities. To discuss this very important topic of Pakistan's survival and the future of Pakistan's economic development, we have in our studios Dr. Hidayatullah Khan. He is the head of Department of Economics at the National University of Modern Languages, Islamabad. Most welcome to you, sir. Thank you very much.
Thank you for having me.
And online joining us, Dr. Usman Chauhan. He is the advisor on economic affairs at the Center for Aerospace and Security Studies, CASS. Most welcome to you, Dr. Chauhan, for joining us. Thank you very much. My first question to you, Dr. Hidayat, that when the current account deficit is hovering around 1% of the GDP, fiscal and the primary balances posted surplus at 1.4% and 2.4% to the GDP, primarily because of the State Bank of Pakistan's record profits and the rise in the non-tax revenue. Inflation is down to 9.5%, the remittances inflow is growing. So with hopes alive to attain at least 36 billion US dollar mark. So the central bank has $11.2 billion of reserves, which estimated to reach at least $13 billion till June 2025. That is the estimate by the State Bank of Pakistan. The GDP growth is actually expected 3.5%, while IMF depicting it 3.2%. So what you foresee about the country's overall economic growth trajectory?
Okay, thank you very much for such a detailed explanation about the current status of Pakistan economy. And as the macroeconomic indicators are showing that the economy is on the face of recovery, it is slowly recovering from most unstable to a stable economy. And the government has taken some fiscal discipline. So, because of that fiscal discipline, now it is on the growth trajectory. The fiscal deficit has been declining, the current account deficit has been declining, and the economy is expected to have even more than 3.5% of GDP growth. But these are the short term recoveries, and these are the short term positive trends in the economy. For the long term growth in the economy and to sustain it, we are supposed to have more, and the government has taken some short term steps for the economic recovery, but to sustain this recovery and to be on the growth trajectory, more is to be done. Especially as it has been mentioned by you that we have to take care of our state owned enterprise, we have to take care of our circular debt, we have to take care of our external and internal debt, especially how we are managing the external and internal debts, and beside that we need to have political stability.
And broadening the tax base, because that is also
yes,
direly needed.
Yes, like this was discussed in our previous program in a way in quite detail, and broadening, but the current measure which were taken by the government, I think it need to be further extended, because those are short term measures. For long term growth we need to have more and more.
Dr. Hidayat, according to the Pakistan Bureau of Statistics, right now the trade deficit decline by 31.1%. Exports slowly but steadily, these are at the growth trajectory, particularly when we are talking about the textiles and clothes, recorded an increase of 9.51% in the first quarter of the financial year 25. So, merchandise exports rise at least 13.45% to $10.88 billion in last 4 months of the fiscal year. Large scale manufacturing actually expanding at the rate of 3.5%. Services sector exports growth record at 5.57%, and IT products were exported to at least 170 countries. So, how do you see overall benchmark of slowing down or shrinking the trade deficit and having little rise in the exports?
Because you know that our existing export base is quite narrow, and our market is also quite narrow, because most of our exports are going to the Europe and USA. So, we are supposed to explore new markets, and our trade deficit with some of our close friends like China, we are supposed to narrow that trade deficit as well. The second thing is that, like, if you look at the Pakistan's export portfolio, the general notion about the exports of Pakistan is low quality cheap goods. So, we are supposed,
or the raw material from Pakistan.
Yeah, or the raw material, like not low value addition. So, for Pakistan to increase its export drastically, first of all we are supposed to have value addition. The second thing is that the world is earning by having brands. So, we will have to put our energies and we have to focus on having brands. When we will be having brands, when we will be having value addition, we will have all of a sudden a jump in our exports. And there are, I think there is a huge potential of untapped.
You are absolutely right, because first of all we need a vibrant industry. Then the second benchmark would be the value addition. Then the third would be to diversify our exports and export-led growth. And then afterwards the trade diversification, because that is also very much needed, not only to export to some of the destinations, but we have to look at new markets to have more exports. You are absolutely right on that account. Dr. Usman, as you have just heard Dr. Hidayat, well before the first quarterly review in early next year, 2025, the IMF special delegation is now going to visit Pakistan very next week. To discuss basically to ongoing program developments, the quantitative performance, the structural benchmarks, the key economic indicators, the policy actions in governance, in social, in monetary and energy sectors particularly, state-owned enterprises and investments and so on. Is it the core purpose of the IMF advanced team to visit Pakistan, or they have some other benchmarks as well?
Bismillah Rahman Rahim. First of all, thank you for having me on your show. It's always a pleasure to be with you. Insofar as your question regarding the IMF's visit soon is concerned, the factors that you have listed are indeed on their roster. As part of any agreement that the IMF comes to with any country, it requires them to fulfill requirements on an ongoing basis, which has a monitoring element. The IMF therefore looks carefully at how a country is doing, and with Pakistan's significant commitments at a cost that has been significant in terms of political capital but necessary for reforms, the IMF is going to come and discuss with our economic managers how we are doing on those targets. For some of the issues that will be of concern to the IMF, which you have listed, Pakistan has done very well, and so it can proudly say that sacrifices were made, but something positive was realized and is being realized because of those sacrifices. For other things, we may need to recalibrate our targets, because what was promised to the IMF was done at a time that was very, very different in the global economy. Our accords with the IMF date back to last December and January. Now we are in November, 11 months later. The world economy has changed, world politics has changed dramatically. And so what you're going to have is perhaps a recalibration of targets that are more realistic, given that the nature of the beast has changed entirely in that time.
So, your point well taken. So, Dr. Usman, about the recent 2.5% or 250 basis point policy rate cut by the State Bank of Pakistan to level the interest rate at 15%, it is the fourth cut in a row and a 4 years low right now. So, it is because that the central bank slightly eased its extremely cautious approach, primarily because of the sharp decline in the inflation, the industrial growth, better rice and the sugar crop yield and export surge. What are the other reasons, and how it will be basically encourage the local investors, industry and the small businesses to move Pakistan's economy on?
Your question is extremely important, because the metric that you are looking at is one that our business community and our consumers and the government as well is looking at very carefully, which is the base rate, the base interest rate. And you are correct to note that the State Bank of Pakistan has reduced it now by over 800 basis points, but in succession and in a gradualist manner. So now we are at about 15%, but the real effective interest rate is still a positive number, because inflation has been low for 3 months in succession, single-digit figures. So what you now have is that, as you correctly put it, an extremely cautious stance. If I were the governor of the state bank, I would have been far more aggressive in reducing rates earlier on to signal that the change is happening, because I wouldn't base it just on a wait and see approach. Because how long do you want to wait and see while your interest rate is so high and your actual reality on the ground has calmed down so much? If you believe that the economy is getting better, then your interest rate must reflect that, so that business activity can truly start. And I believe that the state bank will continue to go in this gradualist manner, which is for the betterment of the economy. And it speaks to your original contention at the beginning of the show of a renaissance or a revival of the economy, which must and can only happen with a reduction in the base interest rate, reflecting better price
right,
levels.
Dr. Chauhan, absolutely right. Dr. Hidayat, what you perceive whether the foreign direct investment will improve further, as Pakistan Bureau of Statistics and the State Bank data actually shows that it is 48% surge, or $771 million just in the first quarter of the current financial year, mostly in the oil and gas exploration, the information technology and power sectors. While both foreign and the local investors' confidence is actually reviving, as we are witnessing the stock exchange jump to the to break the records, as the PSE index reached over 92,000 marks. So how do you see overall progress on the foreign direct investment benchmarks and the local investors and the foreign investors in listed companies, in not only into the SECP but also into the stock exchange?
Okay, well, this is a very important factor about which you have pointed. I think that when there is a growth in the investment rate, it shows that the investor confidence has been increased in the economy. Now, how that confidence has been capitalized by the listed firms or by some sectors of the economy which are traditionally having foreign direct investment. First of all, like how the traditional institutions are reacting to that confidence. The second thing is that how you can, like you have mentioned, there are three major areas: oil, energy sector, and
IT and power.
IT and power. And we know that which kind of FDI we have in the power sector, which was mostly predatory.
Definitely.
So I think we should have to go for those sectors of the economy for FDI from where we can have maximum benefit.
Definitely.
For the economy as well as for the people of Pakistan. And you know that this is investing in the IT or in the power or in the energy sector or in the fossil fuel sector, most of the time it comes in flocks and it goes in the flocks as well.
You are right. You are
so
right.
That's why we are supposed to bring those investments which are long term, which can not only provide us the much needed foreign direct investment, foreign exchange, but also can build the capacity of our local human resources.
Definitely. When you are talking about building the capacity of the local human resource, the human capital, it is absolutely very important. And now Pakistan is going to announce the electric vehicle policy also on 30th of November. 31 companies actually shown interest to invest in this sector as well. So let's see that more sectors are going to be invested by the foreign investors. Dr. Osman, although China tops basically with the $4 million of or 52% of the total foreign direct investment, but we have seen over in this first quarter the diversification in the foreign direct investment as well, because the Hong Kong invested $99 million, the UK invested $72 million, and US invested so far $29 million of investment, with Saudi Arabia, Qatar and Azerbaijan combined investment promises of at least $7.8 billion. So do you think that this diversification will also pay to Pakistan when it comes to the foreign direct investment?
Yes, I believe that diversification of investment sources is critical for any economy because it protects them from any politicization of FDI, and it also gives them a multi-stakeholder connectivity, which then adds to further FDI. So diversification of an investment portfolio, both from the buy side and the sell side, is very important. So I'm happy to hear that there is some diversification, but for Pakistan, the amount of diversification required needs to be far, far larger.
Yeah, definitely. You are absolutely right. Right now we have Dr. Neelam Nigar. She is the senior economist with us at the telephone line. Dr. Neelam, most welcome to you at the Foresight. How under the IMF deal to reduce the losses, improve the services and scaling back the role of the state-owned enterprises or the state into the state-owned enterprises, which are actually consuming 8% of the GDP. So how do you see this ongoing reform process that includes actually the standard regulations, developing the electronic database, reporting on the operational protocols, business plans, broad appointments, and the independent audit to minimize the fiscal risks and to have public sector obligations, PSO agreement till the June 2025. Do you think that the things are on course and that will be attained according to the agreement with the IMF, and also for the sake of budgetary compositions?
Thank you, Raza Saab. I'm sure I'm audible to you.
Definitely audible. Audible. Please, ma'am, go ahead.
Raza Saab, I think it's very important to look at the performance of state-owned enterprises in Pakistan. There's a long issue with regards to the performance of these state-owned enterprises, and I'm sure the government of Pakistan, as was reported in the previous year, 2023's report, the annual report of state-owned enterprises performance evaluation, it has laid down the modalities, how to go by in order to enhance the productivity, the efficiency of all those enterprises who definitely get a lot of budgetary support from the federal government. Now, on the one hand, these entities have they own significant assets and liabilities, and receive budgetary support. But on the other hand, people are saying, and statistics also show that contributing to fiscal strain, and which impacts its fiscal sustainability. So I'm sure these financial performance, and through evaluation of their financial performance and risk profiling, would help in providing a fiscal space for the government, which is important. And when the government has agreed to the IMF also, these can be materialized, and these can be helped in implementing, not only in helping in creating their efficiency, but also I'm sure it's also important to integrate the state-owned enterprise business plans with the dynamic business model, so that it will enhance its effectiveness and adaptability. Now, it's yet to see how will go by, but I'm sure the government has already directed each unit of the state-owned enterprises to come with a business plan such that it shows its performance, financial performance, not only the financial keeping in view the environment compatibility in their business plan.
You are absolutely right. Absolutely right. Your point well taken. So, Dr. Neelam, current fiscal year 24-25 witnessed ambitious tax target of nearly 13 trillion rupees, 40% higher than the last fiscal year 23-24. Direct taxes got increased by 48%, indirect taxes by 35%, income tax revived upwards, and some concessions also withdrawn. Despite that, the tax collection during the first quarter of the current financial year stood at least 2,556 billion rupees, showing significant shortfall as well. So what do you think, whether increasing the tax rate on the taxpayers who are the existed taxpayers is the solution, or to have more revenue collection to expand actually the tax base, bringing new sectors inside, then the filers and the taxpayers into the tax net?
I think you have rightly pointed out that how important is to address the complexity of Pakistan's tax system. There's a lot of challenges, as we have already discussed. My other colleagues must have also discussed that the achieving the ambitious target of tax target is it's quite ambitious for the government. But I believe that structural reforms, or rather I would say the radical reforms, are needed in order to modernize and expand the tax base. As you mentioned that we not only have to burden the already burdened people who are under the tax net, but we need to expand and modernize the tax base. Now, how can we go by? there's a lot of things that can be done. As I said, it's ambitious, but it can be achievable. There's a need to make, as people are, the ordinary working class are also complaining that filing the tax procedure is not easy for them. So the government can use can take benefit of the digital platforms like mobile apps, which can allow individuals and small businesses to file their taxes with a matter of few clicks. Particularly, I would say that they can easily target the informal sectors and also the real estate and the agriculture. Now, it would create a simple
broadening the tax base, Dr. Neelam. How do you analyze the government efforts to bring traders, wholesalers, you have mentioned retailers, and especially the big businesses into the tax net, discouraging the tax evasion through various means, but why agriculturists, the real estate businesses, the builders, the gold dealers, the private schools, hospitals, who actually earning billions by evading the tax, while the salaried class is bearing the whole tax burden? So how do you see overall framework of the tax system? You have rightly mentioned about digitalizing it, easing the filing of the returns and all that. These are the benchmarks which the government is actually focusing on. But what actually we need to do it so that our tax base must have to be broadened in real sense?
As I said, it's complex, but the government needs to incentivize sectors, be it the real sector, agriculture sector. I would suggest that the government should make a digital tax dashboard, which is easily accessible not only to the informal sector but also across different sectors, so that the government can see in real time the transactions, the earnings, the sales of not only the small businesses but also the big businesses, which need to be brought under the tax net. It is easy. It would make the tax system transparent and would also boost the tax morale for people also, who will be willing to comply and also have being incentivized in filing their taxes. So I'm sure these are not something which are not something which are not to be done. It is very easy in today's world to digitize the whole tax system and easily have a transparent access to the incomes and earnings of big businesses, just by making it more accessible to the people. So I'm sure these can be done. And also, I would say that for the informal sector, give some tax incentives in the form of tax credit.
Definitely, you are absolutely right, because we have to bring that whole of the tax system at the fingertips, because everyone has the mobile phones and everyone has the laptops and all that. So everyone can file those returns, but those returns must have to be, the process must have to be very easy, so that more people should enter into the tax net and willingly pay the taxes and incentivize that. That is very important. So thank you very much, Dr. Neelam Nigar, for being with us at the telephone line and the very candid views. Dr. Hidayat, as we all know that the debt is basically burdening Pakistan from the last many decades, and the debt retirement, as according to the Governor State Bank, Pakistan has to retire at least $26 billion during the current fiscal year only, while already 5.7 billion already paid. Now 14.1 billion will be rolled over, as the State Bank Governor said, while 6.3 billion will have to be arranged. From where it is going to be, and it's not clear whether launching of the some sort of Euro bonds or the Panda bonds could help in this regard, and if not, again could be the borrowing from the international banks at the higher interest rates. So what is going to be when such kind of situation we have?
Okay, that is very important question, and when we look at the debt management of Pakistan, it is a mixed kind of bag. So at the same time, we are having loans from the multilateral donors like IMF and World Bank and Asian Development Bank, and we are also having some bilateral loans from our friendly countries and even from some commercial banks in the China. And then we have also floated in future the Sukuk bonds. But you know that for floating new bonds, there are some basic requirement, or there are some preconditions in an economy. Your interest rate should be low, rate of inflation must be low, the credit rating of the country should be really good, which are not in case of Pakistan, and there should be political stability. So I don't think so that if a new Panda bond or whatsoever Euro bond is floated by the government, it will be receiving that kind of reaction from the investor.
Definitely, you are right. Your point well taken, especially when we are talking about the credit ratings. Dr. Usman, Pakistan has to launch these Euro or the Panda bonds, but right now the Fitch and Moody's meagerly improved the long-term rating also by 1 notch to CCC plus and upgrading up to CAA2. So, but Finance Minister said that we plan Euro bonds in the next fiscal year. When Standard and Poor's, the Fitch and the Moody's will improve Pakistan's overall ratings, and he is optimistic that it will be done in the next year. What do you think the long-term rating will get top gear considering the slight economic improvements and overall benchmarks which are actually showing the promising results?
Yes, I think that the finance minister has made an expression of good judgment by suggesting that if we float bonds, next year would be the right time, because right now you're seeing the first stages of an improving local and domestic and international economy. And so right now is probably not the time to float them, because you wouldn't get the market interest at a time when global appetite for fixed income is declining for bonds in general as interest rates fall. Once interest rates worldwide come to a steadier state and a lower, steadier state, then the fixed income investors will start to look for where the opportunities lie within this asset class. And emerging markets tend to offer what's called a more high yield investment. And Pakistan's rating will probably improve 1 notch, possibly 2 over that time. And that's a good thing, because right now, in the recent past, the rating has been, I think, a little bit too excessively downgraded by the rating agencies as part of a panic that they've had, which is not rational in my view. And I think that when the ratings increase and the global interest rates decrease, you will start to see an interest within the asset class for emerging market bonds. Pakistan will be an emerging market category by that time. And if it floats stuff, I think it will be very good, so long as some other good things are done on our side. The first thing that would be important is that we stick to our debt servicing obligations on the international debt. Second, the reforms that take place have to incorporate a reduction in the liabilities of the government, which includes the divestiture of things like the SOEs as well as energy sector reforms, and basically showing that there's fiscal soundness to be able to repay the international investors. And the result of this would be that you would have better foreign investment attitudes towards us as an emerging market, because they will see that not only does Pakistan have indigenous resources to manage its fiscal problems or fiscal challenges, but also that it is attractive in an international sense. And I think that would be a very positive thing if next year they float it and all of these things are done and the climate overall looks better.
Your point well taken, and Dr. Chauhan, you and the finance minister are at the same page right now at this point in time, right? So, Dr. Hidayat, government has approved the Circular Debt Management Plan, CDMP, to reduce the escalation of the pace of the monster of the circular debt under IMF conditions, which is already reached at least 2.4 trillion rupees. And it is said that this will move to this move actually will reduce the liabilities in power sector and enhance the financial sustainability. So how do you see this circular debt management plan basically?
Actually, the most of the circular debt in Pakistan, it is coming from the IPPs. So, I have not seen anything in practical that how the government will be dealing from the circular debt that has accumulated from the IPPs. I have not seen anything to manage the line losses. I have not seen anything which in which the different discos are mismanaging the revenue collection and the debt. So, that is I think a very tall claim by the government, and we are also having a fiscal responsibility and debt limitation act as old as 2000.
But Dr. Hidayat, government has a plan on independent power producers as well, IPPs. The plan is already there. If Dr. Usman can answer that, how imperative is to, as just Dr. Hidayat mentioned, that the termination of the power purchase agreements, PPAs, with the 5 oldest independent power producers, IPPs, and that which the government claim actually that that saves 60 to 70 billion rupees, and the revision of PPAs of 18 other IPPs is actually underway. It will take at least 4 to 6 months, as the Energy Minister has said. The completion of negotiations with the bagasse-based IPPs, withdrawal of the dollar-based indexation and replacing with the Pak rupee, that is again a very important decision which is already taken. So, this might help control the circular debt, give space to lower power prices, and facilitate the cheap energy to the industry, which is very important for the competitive exports. How do you see, Dr. Chauhan, on that aspect?
I fully agree with you, and I think you've given an excellent summary of it. The important thing is for us as a nation, irrespective of whichever government is in power, to have a comprehensive energy strategy for the next 30 years. That is hard to do because the global energy structure is changing. You have such a fast collapse of solar prices, you have new renewable ideas, you have electric vehicles. There's so many things that are changing, so it's difficult, but you have to have some coherent vision of what you want to do. What I'm seeing right now with the IPPs is a kind of remedying of a bad situation that took 30 years in the making. And this idea of tactically solving things is good, but it is not ideal, because you want to have a comprehensive strategy backing this up. And I also think that punitive actions against specific actors actually leaves a bad taste in this sector in terms of future investment. So what you would rather do is, what they're doing is right, because you are renegotiating contracts on more favorable terms, particularly what you mentioned in terms of removing dollar indexation. That is quite a ridiculous thing, and that too, payments on capacity rather than on production, etc. All of those factors have to be revised, but if it is done in the context of a longer term strategy of energy, it will be much better for all stakeholders, because I do want investment in the energy sector. I do want us to be at the forefront of renewable and sustainable energy, and all of this is possible so long as all stakeholders are brought together.
Definitely. These are, I think so, that these would be the benchmarks which IMF also stressed upon. So, Dr. Chauhan, one last question, and this question directed to you both. First, if you just answer it, and very brief because we have run short of time, what would be the implications of any eventuality in Middle East, especially in case of any sort of attack on Iran, will have for Pakistan's economy, because this is already very fragile, and we are actually getting the low-hanging fruits of the international overall lower commodity prices and the lower oil and the crude oil prices actually. Do you think that the inflation assessment could offset if oil prices and the food inflation jumped, and more taxes will be imposed to plug in the revenue gaps actually? So that will again escalate the inflation, not only the food inflation but also the real-time inflation. So how do you see overall economic benchmarks in case of any regional crisis?
Yes, God forbid something like this happens, it would have catastrophic ramifications for the world economy. And you would see similar echoes to the disruptions you faced in 2022, but at a larger scale, partly because Iran is much closer to us than the Black Sea is, but also because the ramifications in terms of what it affects in terms of oil prices, in terms of the spread of conflict, can be very significant. Pakistan is not a party to this conflict, and Pakistan advocates for peace and for development for all countries working together. And since we have had good recovery signs in Pakistan and in the world overall, I would like this to continue. And the belligerents in the world whomsoever they may be and howsoever they may be, are in a very strong position to disrupt this, unfortunately. And I would like for a more peaceful environment so that countries can begin to recover from the turmoil of the decade that is already halfway down, the 2020s, and at least have the second half of this decade proceed in a more decent and humane manner.
Absolutely right. You are right. Dr. Hidayat, if you want to add something into that.
Yes, like this is something which will be a great disaster for the world economy. But I think that the sense will prevail, and due to the political changes in US, and which is like Trump is time and again advocating for no future wars or no indulgence in the future wars. So if it is calm from that side, I don't think that that there would be a large scale war between Iran and Israel. There can be some like previous attacks and then retaliation and this kind of thing, because the world can't afford most of the world oil.
But Dr. Hidayat, we are actually we are discussing the worst case scenario in God forbid if anything happens like that. But that is really we hope that after the US elections there would be some sort of a change in Middle East and have peace, not only in that region but also in Ukraine-Russia crisis as well, and in the crisis elsewhere in the world. Pakistan wants peace in the region. So thank you very much, Dr. Hidayat, for being with us in the studios, and thank you very much, Dr. Usman, for being with us online and for your candid views. Viewers, as you have just listened to our panelists, it is important, very important, that the state-owned enterprises must have to be rationalized. The reforms must have to be very candid, and in that sense, the risk minimization is very, very necessary, so that those are not going to be burden at the national exchequer. The tax base broadening is very important area that must have to be very much simplified, so that a common man can easily file his or her return, and also digitalization of this process would pay a lot to Pakistan. We have to broaden that tax base and incentivize this tax culture overall. This is very important. Foreign and domestic debt retirement is also very critical for Pakistan, and we have to focus on that, because otherwise there would not be a much space available for development in the country. Finance Minister rightly said, and our panelists are totally agree with it, that we have to launch these Euro bonds or any sort of a bonds into the international market when it would be a feasible to launch and have a very feasible condition. Ratings must have to be in favor of Pakistan. So, and then the circular debt management. It is important that we are in the right direction, but we have to get some sort of a solution which must have to be long term. In that sense, right now, the credit goes to the government that they are making all-out efforts to bring Pakistan right on track on economic prosperity and development, and whole of the nation must have to support it, and we have to create some sort of a political stability as well, so that we can progress economically. This is all from today's Foresight. It's time to sign off. Allah Hafiz.